UK Shadow Chancellor Alan Johnson, and he joins us now. Alan Johnson, thank you so much for joining us. Now, exactly what are you critical of? We've been speaking to investors, some of them saying, well, sure, it's ambitious, but at least something's being done to tackle this huge budget deficit.
Well, something was being done by us. I mean, the government make two arguments, that we would have done nothing and that they're actually cutting less than we would have cut. You can't sustain both arguments. No, our argument is this is a reckless gamble. This is cutting too deeply, too quickly. There's no sign of the kind of momentum in the private sector that we need to avoid these kind of cuts actually damaging the fragile recovery.
Alan Johnson, if you say this is a reckless cuts, you mean that actually they will go through them? I mean, what we're hearing today is that they've announced huge measures, but they may not be able to cut as much as they want to, and therefore it would be a more manageable deficit reduction.
Well, it's £40 billion more than we would have cut, and the whole point of that is 500,000 people are going to lose their jobs, according to their statistics. PricewaterhouseCoopers said last week for every job that goes in the private sector, public sector, it's matched in the private sector. So you're talking about 1 million jobs, all of that tax and revenue lost, and on a market where there is no sign of the kind of pickup we need to get people into jobs. Now,
but the bond market is supporting the cuts that were announced yesterday. At the same time, actually, Fitch Ratings endorsed the measure, saying that they were consistent with Britain's outstanding bonds.
Well, I believe they would have supported a slower rate of fiscal reduction as well. That was absolutely in line with the G20 summit in June after we left government, halving over 4 years. It's consistent with what some other countries, the pace and depth at which they're going at. And you have to look at the situation around the world. There's no sign. US labour market figures were bad. Japan statistics are very poor. The rest of Europe, apart from Germany, there's no sign of any pickup here. So I don't think the signs are this reckless gamble suggests that there's going to be the kind of takeoff that we need in our economy. It more suggests if we don't go back into double-dip recession, we're going to knock along the bottom for a long time yet.
So how concerned are you that actually these budget cuts will then force the Bank of England, although it's independent, to actually put more QE to sustain growth, and that would put us in, 2-3 years of lumbering growth? Well,
that's back on the agenda. Quantitative easing is back on the agenda, as we know from the news from last weekend. Look, there's a real issue here about this speed and depth. There's a real issue about £6 billion in-year cuts this year that we would not have made, the effects of which haven't been felt because they've been pushed back into the last quarter of the year. There's a real issue about VAT increase on 1st of January. What is that going to do for demand? And what George Osborne is doing is more about the electoral cycle than the economic cycle. It's about a fixed-term parliament of 5 years, which they've legislated for, and the hope and the gamble that actually all the bad news is up front and that they'll be in a better position at the next general election.
Alan Johnson,
whereas what should be happening is that there should be a different profiling of these cuts over that period.
But are you concerned that actually it will force the Bank of England to add more QE and that this will be dangerous for the economy in the long run?
I do think there's that danger, yes.
And in terms of what you think, going future, these low rates, how are they a risk for the economy? We're speaking to investors every day, and some of them saying, look, if you keep QE pumping into the economy, it means that small companies that shouldn't survive are surviving, and the economy may collapse once interest rates go up again.
Well, it's a decision for the Bank of England, and George Osborne has taken exactly the same path as Alistair Darling. In fact, he said he'll take the same position as his predecessor. If the Bank of England decide this is necessary, then for all the reasons that you mentioned, if the Bank of England think that's necessary, then it will need to happen. The point is, I think that yesterday's announcement made it more likely that that will be necessary.
Are you looking at a double-dip recession here for the UK? Is that what you're concerned about ultimately?
Well, I said the other day that I think it's more likely that we'll bump along the bottom. No real takeoff, very low levels of growth, but there is the danger of slipping back into double-dip recession, and I don't think yesterday's announcement has done anything to actually help that situation.
Alan Johnson, thank you so much, the UK Shadow Chancellor there.